What's going on, guys? So we're going to talk a little bit about Amazon. Okay, I did not make a video on Amazon yesterday after the bell, after the earnings. I mean, if you were anywhere near a computer, near Twitter, near your phone, near anything, you already knew that Amazon got absolutely hammered. I mean, they completely destroyed the stock yesterday off of those earnings. So one level that I was kind of looking at, and this is how you have to kind of approach these earnings, right? So I'm going to give a little bit of advice. We're going to go over the chart a little bit. We're going to talk about, how potentially you could have made money, where you should have potentially got in, where should you have gotten out of this stock, so forth and so forth, right? So what we're going to look at here, the initial drop that we got off of Amazon came all the way down to 2605, I believe, right? Or 2560, excuse me. 2560, and then we got the initial second hour push down to 2519, 2520. So going into today's session, what you're looking for, you have to expect some sort of bounce. There has to be some sort of relief. We started to get that bounce early in the pre-market. So when you wake up in the morning, or when you get up, when you start doing your charting, you need to look at the pre-market data and see what did this do after it started to had that initial sell-off, right? So in the after hours, it started to bounce. In the pre-market, it started to fade here. What we're looking at here is this first hour candle, this 6 a.m. Pacific Standard Time candle. Obviously, market opens at 6:30. So that first 30-minute candle gave that initial flush and tagged 2519 to the absolute perfect spot. What is that telling you? If we get any sort of bounce, any sort of consolidation, your line in the sand for a short position, even though Amazon was down 200-300 points already, that's irrelevant. If you think that stocks can't go down any farther, they can go a lot farther down. These stocks can go to zero. Now, that's a figure of speech. Amazon's not going to zero. But if you think that just because it's down 200-300 points that it can't go anymore, you're rudely mistaken. So 2519 was the level, the line in the sand. It was the pre-market lows. It was also the pre-market, the after hours earnings lows. It was also the pre-market and first 30-minute candles lows. You can see here for 2 hours, we consolidated sideways. It tried to attempt a bounce here, was rejected at this green supply zone here. This is a 5-day moving average. And when it took this level out, it flushed. Not only did it flush from 2519, but it gave you a low of 2432. Congratulations to one of the members in our Discord. Sheppy, he took, just an absolute monstrous day. I think the guy's up like $6,000, $7,000 on the day between both of his two trades. Absolutely insane moves today. So with that being said, this is the level that you were looking for here. What would have been the level to get out of if this would have bounced against you? Now, because the drop was so significant, you have to use that kind of like that pre-market high as your stop, right? So the stop was going to be 2664. Now, obviously, that's a lot of risk on Amazon that you would have to assume. If you did not want to assume that much risk, then you can play the closest supply zone that the stock price is riding down. In Amazon's case, it was riding down on the 5-day moving average on the 1 hour time frame. You would use any close over the 5-day moving average as your stop. As long as we stay under, you continue to hold. The moment we close over, you take your profits or you cut your loss depending on where you're at in the trade. I hope that helps, guys. Have a fantastic weekend. If you guys want to learn more, you guys are looking for a free strategy to kind of day trade and scalp the first 1 to 2 hours of the market, definitely check the description box down below. Also, make sure to join the Discord. That link is also in the description box below, and I'll see you guys on the next one.